Hey guys, this is Dave with Moniology. Hope everyone is having a great weekend. For those of you in the US, happy Labor Day weekend. This is our weekend market review for September 2nd through 4th, 2017. For those of you who are new to our videos, our approach is to take a longer term perspective, and these weekend market reviews include daily, weekly, and monthly charts of some of the most important sectors in the market, as we believe they help us determine the direction that various different stocks that we invest in will head. So one of the reasons we like to look at longer term frames such as weekly and monthly is because they remove the noise from the market. And enjoy the video, and please send us your feedback. Okay, so this is the 10-year U.S. Treasury, the daily view, and what we see here is that it was a beautiful bounce hammer pattern on the daily, and looks like we're starting to pick up some steam in the daily and possibly make a bounce towards that middle Bollinger Band on the Treasury. So the yields might be going up in the short term in the next couple of weeks, so something to keep an eye on for. The 10-year weekly chart, we're still in this bullish flag pattern, but we're still in a corrective mode. Now, while we bounced off our support line perfectly, I might add, we may make a run towards this upper trend line here and of this flag, and we'll see what happens at that point. If this 21 area breaks, then we likely test this lower boundary of the flag. But so far, quite a nice hammer pattern last week, and we might expect to see a nice little rally in 10-year Treasury yields. And on the monthly, well, it's just been a couple of days, but we'll see how this develops. But again, what this monthly perspective does show you is that we've been in a consolidation and correction pattern for the last maybe 6 months, but we're still in a very bullish development here long term for 10-year Treasuries. So if you have fixed income, definitely something to consider longer term, because if this breaks out of this flag pattern, if the 10-year Treasury yield does break out, we might have a strong rally in yields, and this could mean a very world of pain for fixed income investors. Gold on the daily. So what's obvious here is that we had some beautiful patterns, hammer patterns over the last couple of days, and we unequivocally broke out of this 1320 area. Over the weekend, we even tested 1350 on futures. So while there might be some pullback, looking over the speculative data, we're starting to get a lot of speculators into this space. So that might just mean that we might have to pull back to shake some weekends out. But bottom line is, we're in the very early stages of a major long-term directional shift in gold, and you want to be long the sector in every possible way. This is gold on the weekly. This is what I was pointing out. This 1300 level had been resistance for multiple points in 2017. Finally broke out, massive volume, and our price target is in the short run about 1380, but in the longer run, I mean, we think that this is going to be above 2000, and there are going to be some enormous gains in the sector. And gold on the monthly, here again, why we believe that 1380 will be tested, which is this area here, which is the last previous point of resistance that we have here. But we're above this downtrend now, and now we just have to break out above the 60 level on the RSI. It's going to be some consolidation, in my opinion. That's where we might see a pullback over the next couple of weeks. But should this area break out higher, this could be a massive rush to the upside. Junk yield bond, high yield bond ETF, JNK. This is the daily chart, and well, we've had quite the rally. So we thought that this would be just a snapback rally, but which we, by the way, expected. But at this point, it's been a really nice one. But here's what we're noticing. First of all, why did we think we would have a rally here? Well, we saw positive divergence. So we had this double bottom here around that 3650 area, but RSI here was massively diverging to the positive direction. So no surprise we had this rally. Now, what do we see here? We have this potential double top around this 3720 area, right? But look at this. RSI is much lower, momentum therefore is much lower than the previous high at 37. So this just tells us the very likelihood that this is a snapback rally bounce back, which will be met with stiff resistance and probably will break lower towards the 36 level at a minimum. Well, we'll have to see. This is the weekly chart. Points to kind of what we're seeing on the daily. We broke out of this massive bearish wedge pattern. We had a major red candlestick over here. We had this couple week, 3-week rally to retest this wedge breakout, and this is where we think that there's going to be some very significant resistance, and if this cannot break higher, we're ultimately going to dump much lower. The monthly chart, this is interesting because this could be one of those longer term bearish consolidations where it can't break through that 37, 38 area and eventually heads lower. Again, let the price direct us, not any way around, not the other way around. Crude oil on the daily chart had some nice bullish candlesticks here or in the short run. Now, crude is one of those sectors where it's very much affected in the short run by supply and demand. But in the long run, yeah, supply and demand does matter as well, but it's also heavily affected by trading contracts and hedgers and speculators. And so in the short run, there's a lot of noise and volatility in crude. So we'll stick to the longer term patterns here, but we do see some momentum building and developing. This is something we've pointed out in previous oil videos, oil and energy sector videos, and we'll point out what we're looking at in the weekly chart here, charts ahead. So the weekly chart on crude had a nice pattern, nice support at this 44 handle here, and we've had this nice hammer bounce back so far. Why we're bullish on oil is that we've broken out of this downtrend that we've been in 2017, and while we said it's very possible that we test this line from the upside, which would mean potentially more downside in price, ultimately we've began a new uptrend in our opinion, and now is the time to start initiating or looking at building a watch list depending on your strategy. But oil we are bullish on actually, so long as this trend line in RSI holds from the upside. And gold on the monthly chart, we see an inverse head and shoulders here being formed that will, when it breaks out to the upside, likely direct oil prices much higher towards that 80 to 100 level. So some potential really nice gains, but it might take some time to develop, so stay tuned. NASDAQ daily. So we've had some very nice, we've had 4 straight up days, hammer patterns, but while we're approaching all-time highs once again, just as we pointed out in the junk ETF, we're having negative divergence here, slight negative divergence developing, and so that would confirm my thesis that we're possibly just bouncing back to see how strong this rally could be. And if this 6,500 area cannot break to the upside, very possible we start rolling over to head towards that towards the 200 EMA around the 59.50 level. NASDAQ weekly, so far so good. Beautiful pattern. You can't really say anything aside from the fact that if this breaks 6,500, you want to go long. You want to go long and have a tight stop below that 6,500 level, and this might be setting up for another leg higher. But again, no surprise that we've bounced above this middle Bollinger Band. That's some strong support and that traders look for. And this was actually a bullish flag pattern here on the NASDAQ, but so far we haven't broken above that 70 on the RSI. It's actually been a rather weak bounce, and won't be surprised if this bounce is met with failure. NASDAQ monthly, it's kind of hard to see. Let me zoom in here, but bottom line is, this is just like in the junk ETF. There's been a wedge. We broke below that wedge, and now we're trying to attempt to recapture that wedge. We're still in massively overbought territory above that 70 line on the RSI. So as long as that 70 level is held to the upside, we are in a bullish trend in the NASDAQ. There's nothing that can be said about that. Moving on to the Russell 2000 daily. We've had this very nice multi-week rally ever since we broke below that 200 EMA. Very often that's what happens. A lot of amateur traders put their stops right at or right below the 200 EMA, and these algorithms, they know that, they smell that, they shake out the weak hands, and then they have a strong bounce back, which is why we had the support zone around that 13 1350 area, and sure enough we tagged it, and now we've rallied higher, and now we're at this resistance level around that 1425 area. So and no surprise, we're also at resistance, previous RSI resistance, but this is actually a positive development. RSI here is almost at the same level that it was where price was much higher. So this is a positive divergence development, but nonetheless, this is the price point where we broke down that 60 to 65 level on RSI. So if this is met with resistance and we can't continue to push higher, don't be surprised to see at the very least a retest at that 1350 area, possibly breaking below and going much lower. Russell weekly, so far so good. Weekly handle, couple weeks of positive price action. 1452 is that area that you want to see. If that breaks to the upside, say goodbye to the bears and it's a new leg higher. If that holds and bears can hold that area, then likely we roll back over. And the Russell monthly, let's zoom in here. So the Russell monthly here is having this kind of consolidation of between 1400 and 1500. So but it's consolidating right below that 70 on the RSI, which is that very crucial area to break out of if you want to move higher and take that next leg higher. Our hunches were going to go lower, but stay tuned to watch and see what happens with MACDs here. Do we curl back higher or do we circle back lower and break below zero? That'll determine the next major move in the markets, and for the time being, there's really nothing to do here but watch. S&P 500, same thing, same story. We're testing this RSI breakdown point here of around 60, so wouldn't be surprised to see this rally fail, but if it's going to fail, it has to do so here. S&P on the weekly, 2500 area is the one you want to watch. I think it's going to fail, but we'll see what happens. We'll let the markets determine that next move. And S&P monthly, very overbought, but something overbought is that's in that overbought zone from 70 to 80 on the RSI. That's where the biggest moves do occur. So let's keep a close eye on that 2500 level. If it cannot break higher, we're gonna head lower and probably end up on a monthly level making a run towards 2050. So a pretty sizable correction could be in the hands. On the other hand, if we break above 2500, then that correction won't be seen for quite a long time. The tips to 20-year bond ratio. This is one that you want to watch for real yields. It's a sign of inflation, and if it breaks higher. So this is the daily, and it suggests that we're starting to see a little bit of inflation pick up here, which is not necessarily a bad thing in the short run for the markets. No surprise that this is happening because look at this, double bottom, but positive divergence on the RSI. So RSI was in a much better position. The momentum was a much better position than price had been, and so no surprise that we're seeing at least a bounce back rally. Right now, MACDs are circling above zero, which is very positive development both for yields as well as commodities, precious metals. And again, no surprise that we're seeing this very bullish price action in PMs. Longer term, this is a very bullish flag pattern that will eventually break to the upside. It might be beginning to do so now. Notice we had this double bottom that we pointed out on the daily, and again, divergence on the RSI. So if this breaks 50 on the weekly RSI, expect a major move in inflation, and it's going to hit a lot of fixed income investors very hard. Tips to long-term treasuries on the monthly. Same thing, bullish flag. Let's see and wait and see how this breaks. Our opinion is these MACDs are still circling in a corrective fashion for a couple more weeks or months, but ultimately we'll head back higher. And that's going to be the next big move in gold and yields as well. U.S. dollar is kind of an inverse to real yields, and so no surprise that we've been getting killed rather in the dollar, we've called it since 103, but we are starting to see some strength in the dollar at the same time. So wouldn't be surprised to see a rally in the dollar to see if we can't test that 50 to 60 area on the weekly RSI and test this downtrend line around that 94 area. From a weekly chart, it's hard to see how this is bullish. Now, it's very possible, we might see a pretty strong rally towards that 95, 96 area, possibly shake out some hands, head over all the way to the 50 EMA around the 97 area. But ultimately, the dollar is in a downtrend. This is a multi-year bear pattern here that ultimately, in our opinion, breaks lower to that 84 to 86 level. We'll see that on the monthly, but really, it depends on your perspective, because on the one hand, the weekly pattern is bearish. The monthly pattern shows some potential for long-term bullishness that ultimately takes the dollar to 120, but not before a dip down into the low 80s. Why do we say that? Well, this is a triple top pattern, and after a multiple bottom pattern here for multiple years since 2008 to 2014, we finally broke higher. Very often, once these big breakouts do happen, if they can't continue higher, this is the ultimate price target around 120, it breaks lower to retest that level of breakout. So anywhere between that 82 to 88 level is likely to be tested on the monthly, and ultimately, if it does find support, that's when the big move higher towards 120 likely does occur. The VIX, the infamous VIX. Well, so far on the daily, it's still a bullish flag so long as this 10 area does hold, but it's been getting shorted ever since. Anytime it has a big rally, it's getting shorted. So we take a look at the weekly, and it's still in this kind of bullish flag pattern. I mean, it's not your picture perfect bullish flag. So you want to see this 10 level hold if you're a bull on the VIX, and on the monthly chart, same thing, kind of a bullish flag, but right now we're retesting that lower level. So until this breaks to the upside on a monthly level, there's nothing really to see here. And let's have a look at this last. Okay, so the World Index ex-US. Well, we've had this nice bounce back rally. We've been testing and kind of hovering above that 50 on the daily EMA. So we found support here, and now we're retesting the upper band of the Bollinger Band. At the same time, we're retesting the exact area where RSI broke down, where price broke down, and so we'll see if this can break to the upside. Our hunch is that we will meet stiff resistance and roll back over. Let's see, because MACDs are now above zero, so anything can happen. Weekly chart, we've broken above this pennant pattern, and now we're and now we're testing it from the downside. If it can't recapture this, we're going to roll over. But RSI is above 70 now, so that's a very bullish development. Let's see. I would stay away if you own it. Keep owning the World Index. Potentially trim a little bit, but if you don't own it, I would not be buying at this point until it breaks that 2,000 level to the upside. And finally, on the monthly chart, well, RSI seems to be consolidating right above that, right next to that level here that we broke down from previous highs around 2011. So let's see what happens. If it can break above that 2,000 level, that likely indicates that RSI is going to break above 70, and we're likely going to make a run towards that 2,400 level. And if we can't break above 2,000, we start that correction, which everyone has been waiting for, but nobody knows when actually will develop. Anyway, guys, thanks for watching. Please send us your feedback. Do follow us on StockTwits at Moniology, at Twitter at Moniology, and please subscribe to our videos on YouTube. Thanks again, and have a wonderful week.